tax relief applications. My name is Thomas Boatin, and I serve as the Business Development Manager at Brics Africa. And at Brics Africa, we are a professional consulting firm committed to strengthening businesses through practical solutions in taxation, accounting, compliance, corporate advisory, and professional training. So over the years, we've worked with a lot of SMEs, startups, growing businesses, and professionals across various sectors. And we've helped them navigate regulatory requirements, improve compliance systems, and build sustainable financial structures. I mean, beyond these advisory services, we are deeply invested in capacity building. We've successfully organized a lot of structured training programs in taxation, payroll management, VAT compliance, business structuring, data analytics, and a lot of programs. And our goal has always been simple, to bridge the knowledge gap between policy and practical implementation. And this evening's webinar forms part of that particular commitment. And as you may already know, today's session is a focused introduction to annual tax returns, filing procedures, and tax relief applications. However, this is only a small section of what will be covered in depth during our upcoming 2-day practical tax training masterclass, where we'll provide hands-on demonstrations on VAT, payee, withholding tax, payroll administration, GRA portal, and practical compliance strategies under the current tax regime, which is very important, the current tax regime. I mean, we believe that knowledge should not only be theoretical, but actionable as well. And that is exactly what we aim to deliver. So before we proceed, I'd like to remind everyone to keep your microphones muted throughout the session so we enjoy a smooth flow. And there'll be room for questions, at the appropriate time when the presentation is done. And then we enjoy. So now it is my pleasure to introduce our facilitator for this session. Mr. David Kupour is a chartered accountant and a certified tax professional with extensive experience in tax advisory, compliance, in fact, name it. He's worked closely with businesses across multiple sectors, providing practical guidance on regulatory compliance, tax planning, and reporting. He doesn't just bring the technical expertise, but real-world application as well, and clarity to complex tax matters. And I particularly am very privileged to have him lead this session, and it would be enjoyable as well. So it's 5:10. Without further delay, I would like to officially hand over to Mr. David Kupour so he takes us through today's discussion. When he's done, there will be a slot for questions and answers, and then we'll end it. It's just a 1-hour webinar. So, Mr. David, if you can hear me and you can talk, I would like to officially hand over to you.
Thank you, Thomas. Good evening, colleagues.
Good evening, sir.
Good evening, sir.
Can you hear me?
Yes, sir, we can hear you.
Oh, that's great. That's great. That's great. I want to also welcome you to this special meeting. It is always great to meet you to discuss about taxation, right? It's a very interesting area that everybody is interested, from the government to the first day child is also interested in a taxation system. So it's very important for us to educate ourselves, to understand some of the things we need to know so that we will not find ourselves in a situation where we cannot run away, because this is one of the main source of government revenue, right? So government wouldn't joke with it, right? If you look at 2026 budget, you will see that 60% of the budget is going to be financed through tax revenue. And so it means that it's very, very important. And so when DRA is not able to meet their target, you and I, we are going to suffer, right? So the money is going to come from you and I. So it's better for us to understand. So I think Thomas have said what I supposed to say, but this is just a brief. When you find yourself in a village, you see that sometimes when there was no light in that period, they have some televisions where they take you money. You go and watch some clips, small portion of the movie, and they ask you that go and prepare, find yourself and come back. We're going to show you the full video or movie, right? So this is what we are also going to do. We are also going to give you a glimpse of what we are going to experience on the 28th and 1st month, right? So this evening, our task is very simple. We have entered into the new year. Businesses, individuals, we have an obligation. What is our obligation? We are going to look at Income Tax Act as amended, Act 896, 2015, right? This act has been amended in diverse ways. Now, a portion of it talk about annual tax filings or annual tax returns. So, in this annual tax returns, we're going to look at what is the law is requiring of us as a company, as individuals. We also look at, okay, in the tax law, what are some of the incentives that are available, particularly for we individuals who are into employment or who owns our own business? What are some of the reliefs or tax benefits we stand to get? All right. So that is going to be our discussion. And so we will not be basing much on the theoretical aspect. We'll give you the practical aspect of it. So we are not going to be doing theory, right? I hope everybody is ready for this discussion this evening, right?
Yes.
Yes, let's carry on.
Yes. So we can start, isn't it?
Yes, we can.
Yes,
Yes.
we can.
So when we talk about annual tax filing, what is it? Annual tax filing is a mandatory. You see the word. It is mandatory. It's not optional. It is mandatory official document of your income, your deduction, and tax liability that is supposed to be filed by individuals and businesses to GRA. Now, it means that we are now going to file our annual return for the year 2025. Right? Now, what is the deadline for us to comply with this? The law says that by 30th April of the following year, we have to file our returns of our employees and the business operations, right? Present our financial and tell us, okay, how much are you going to pay as a tax? Right? So the year 2025 have ended, but businesses are required to file their taxes by 30th April of 2026. And it is mandatory for all individuals and all companies that earn income or have chargeable income for the year 2025. So they're saying that the whole of the year of 2025, your operation, come, present your financial statement, present information, telling us how much did you get for the year 2025? What is your revenue? Now, when you get your total revenue for the whole year, look at all the relevant expenditures. When you take it from it and you're getting a profit, government is very interested in the profit you're making because you pay taxes on profits. So when you file, every company have to present, normally a registered company, they present an audited financial statement to file, because it's not that everybody can say, okay, you just do your small account and go and file. Most especially companies and sole proprietorship business are normally required to prepare their financial statement, normally audited by auditor, right? To do that. Now, is there any exemption? Is there any consequences I will meet if I fail to do so? Yes. The law says that if you fail to file your annual returns by 30th April, there is a penalty for you. Someone will ask, is it by force? I have opened my business. I have gotten my money. You say to file. I'm not ready. Why? It is required by law. The law mandates it. The law says that you should do it. Right. Annual returns is not only required by DRA, the Registered General will require that you file your annual returns every year by companies. Right. So if you fail to file your tax by 30th April, you are going to pay penalty. Right. Now, if that penalty you fail to file, we pay 500 Ghana cedis, that spot. And every day that the failure continues, you'll be paying 10 cedis. Even if you file and you don't pay the tax, there will be interest on it. Right. Now, if you look at the tax law, it also makes a provision that, okay, in the case where you, the taxpayer, especially most companies, you are not able to get your audited financial statement available by 30th April, what should you do? There is a provision that if you are not able to file your tax by 30th April, you have to write to the Commissioner General of Ghana Revenue Authority that, see, I am supposed to file my annual returns by 30th April of this year. However, due to some emergency, my auditor is not available, or something have happened that we cannot be able to present the financial statement on the due date stated by the law. The provision says that you have to apply for extension of time to file your tax. Are we together? Are we all together here?
Yes, please.
sir.
Good.
But sir, please,
Yes,
your
sir.
network is breaking.
Oh, why?
Yes, your network is breaking.
It is very serious. Is it better?
Yes, we
Is
can
it
hear you
better?
now.
You have
Yes,
to also
it's
check. You have to also check your area. Or maybe it is not my side only.
oh, it's yours, but it's better anyway.
Oh, we thank God. Hallelujah. So you have to apply for extension of time. But you don't apply for the extension of time when the 30, let's say today is the 30th April, and you can't find, and then you want to write, no, that will not apply. You need to apply for the extension of time before the date of what? The deadline. So you realize, okay, the audited financial statement will not be available by 30th April. 2 weeks time, you have to write to the Commissioner General, telling him that we are supposed to, but due to 1, 2, 3, we cannot be able to file by 30th April. Therefore, We want you to give us enough time, at least within 30 days. It shouldn't be more than 30 days. They should grant you at least 30 days so that you can be able to make your audited financials or your financial statement available for you to file. When you apply, the Commissioner General will look at what you have said. Is it reasonable? The reason why you are requesting for extension of time, is it reasonable? When the Commissioner General assess your application and said, okay, that is reasonable, they will grant you the 30 days, right? But if it is not reasonable, the Commissioner General will reject your application. That means that whatever you do, you have to make sure that you file by that day, 30th April. But if you're not able to file, then penalty catch you are going to pay extra. Is it clear? Is it clear?
Yes.
Is it clear?
Yes, sir. Yes, sir.
Correct. So we'll be jotting your questions, and when we finish, we'll talk about it.
Noted.
Good. Who are required to file their tax? In Ghana, individuals and businesses must file their tax within 4 months after the year end. That is 30th April of the following year to GRA. Businesses and individuals who earn chargeable income or who earn income are required to file it. Now, I want us now that you understand what who is supposed to file and the annual returns, let us go through the form. If you have the information, you need to fill it. Normally, it's done on the portal, but I've downloaded the form so that when you get it and you get your audited financial or you get your financials, you can enter them appropriately. So I'm going to share that screen. Oh, sorry. Is my screen showing?
Not yet.
It's not showing?
Okay, sorry.
This is personal income tax return. That is for individual. So now follow me. Follow me. Now, if you come to the current tax office, you see something called TLTO. Have you seen that? Have you seen that?
Yes.
Yeah,
That
we
is
have seen that.
the office.
LTO, we can see that.
LTO. L stands for large. T stands for taxpayer. O stands for office. So large taxpayers office. Now, this large taxpayers office are companies that earn above 5 million Ghana cedis in a year. If you have your annual turnover to be above 5 million Ghana cedis, you are required to register at the large taxpayers office. Right. Please, are we together?
Yes, please.
Yes.
Then the MTC means, MTO means Median Taxpayers Office. Median Taxpayers Office. Median Taxpayers Office. Right. These are taxpayers whose annual turnover is less than 5 million Ghana cedis. It is not up to 5 million Ghana cedis. So 5 million or 5 million Ghana cedis coming down, right? Maybe 4 million coming down. You can register at the median taxpayers office. And then the STO, we used to refer to small taxpayer. Now it's called Service Taxpayers Office. Now it is those companies that their turnover is no more than 90,000 Ghana cedis that can register there. So if, let's say, for you, your business as an individual, you are dealing with sole proprietorship business, or every individual have their tax office. So if it is Adenta, if it is Legon, if it is Printers, if it is if it is
Adabraka.
Adabraka and Co, you write the name of the tax office there. Right. So it is online. So if you access your portal and go to personal income, this will come. But this is to guide us so that when we are feeling with confidence. Now, the year of assessment, if you are filing for the year 2025, now we are talking about 2025 now, you write the year of assessment is 2025. Is it clear?
Yes, please.
Good. Now we have the period from and to. So the period is 1st January 2025 to 31st December. That's the basis period. So the period is 1st January 2025 to 31st December 2025. I hope no one is confused at this point. Good. Now we are coming for personal information. Now, personal information, sign name, you put your sign name, the company, if it is sole proprietorship or individual. Maybe it's me. I put Kupour there. First name, I put David there. I don't have other names. If you have other names, you put it. Then you come to the TIN number, that is tax identification number. If you have the tax identification number of your sole proprietor or your individual, but now individual are using a Ghana card as their TIN number, you write it there nicely. Then you put your telephone number there nicely. Are we together?
Yes, sir.
Yes.
Then we come to nationality. Are you Ghanaian? Are you Nigerian? Are you American? You put it there. So I'm a Ghanaian, then we'll put it there, correct? Then location or Ghana Post digital address. If you have, you put it, your location, maybe Medina. You put your Ghana Post digital address there. Then you put a business name there. So proprietorship, what is your business name? Maybe King David Ventures, right? That is if you are dealing with sole proprietorship, right? You put your name there. Then business activity, what type of business do you do? Are you into provision of goods? Service? What type of, you get it, the activity you deal with, right? Maybe you are into stationery, maybe stationery, right? Good. Then we come, the office you are operating, the business office. Did you rent it or it is for you? Now, if you say you rented it, the portal will open another link that provide the name of the landlord. Now, if your landlord don't want to pay any tax and you're providing this, you're putting your landlord into problem. You get it? Because this information here is asking you to provide. It is not that they are using it for something. So you put your landlord name there, the telephone number and TIN number. Now, if you finish putting them, here you have got your landlord. Now they are going to search, is this man's landlord paid tax? They check. If they see that the landlord is not paying tax, quickly they'll call, landlord, you have not been paying tax when you are into rentals of properties, isn't it? You go there, fine. Don't track you, right? Then the landlord, Why not even inform? Who sent my details? But it's good to fill it. It will help Jerry, right? But if the building or the office space is owned by you, just take. And no question. They won't ask any further question. That's all. You take it. Please, is it okay?
Right.
Very okay, sir.
Okay, so we put the question. No, jot that the question. I will come. Or you jot that the question. We'll give you space for question, fully question, right? Right. You just put your question down. I'll give you the question, right? Now, those into employment. Now we are coming to your employment information. If you are into employment, the TIN number of your employer will be put there. The name of the employer, if it is a company, you put maybe ABC Limited, you put it there. You put the address there. That is into employment. You put it there. Now we are coming to the source of your income. Right, source of income. The A is that if it is a business income, the net business income loss, as per your financial statement, means that you need to provide financial statement. And the profit or loss you make, you have to state it here. You have to put the figure there. Then the B is your employment income. Now, if you come to the employment income, they'll take your annual salary, your annual basic salary. You put the total annual basic salary you're putting it. Maybe the whole of the year, the annual basic salary is 100,000. You put it there. Do you receive any other allowances like cash allowances? You put it there. Other cash benefits, like if they provide accommodation vehicle for you, you quantify and put it there. Do you have, that is other cash benefits, sorry, you put it there. Then excess of bonus. If you receive excess of bonus, you put it there. Then we come to benefit in kind. The company may be providing you some benefits. One is accommodation benefit. You put the figure there. Vehicle benefit, you put it there. Other benefits like loan benefits and share benefits, you quantify everything, put it there. Then you get the total benefit in kind. By adding 1, 2, 3, you add it. Then you come to others. If you receive any director's allowance, you put it there. Now you come and add all your employment income from I to VI. That will give you your total employment income. Right. Now when you get the total employment income, we have discussed two sorts of, you have discussed the business income. We are done with the employment income. We are going to investment and other income you may have. Please, are you following?
Are you following? We are following.
Yes, sir, we are with you.
Sir, yes, sir, but we are with you.
Investment and other income. Royalty. Maybe you have some things you receive royalty from, right? Maybe you have some books and then royalty or some rights you have, right? Royalty you receive, that is your investment income. Interest received, that is interest received. You have given loan or you have interest on your income, like your savings account, you put it there. Dividend. Now this dividend, if you have invested in another company where you receive dividend every year, especially when the dividend is received from non-resident person, right? You put the figure there. Then if you are been renting, you have rental and all. So the taxable rent income, maybe you have property you rent, right? The amount of the rent income that will be taxable, you put it there. Now, if you have some income from foreign sources, let's say you have some investment in US, UK that is coming. We say that the income from foreign source you bring it here. And then you have other income, premium, discount, and you put all of them together. Then you get what is called total investment income. Now, you now going to add all your source of income
business income, if you have any, investment income, if you have any, and employment income. You put all of them together, you get what is called total income. Good. Total income. Total income. Now, we are now coming to, we are now coming to tax computation, right? Now, under the tax computation, mostly it is for the business. Your investment income will be taxed. Employment will be taxed. Now, your net business profit or loss, that is a profit. If you are into business, the profit you have made for that year, that's the figure. Either you make profit or loss. If it is loss, you bring it. If it is profit, you bring it. Now, you have to add back depreciation. Now, depreciation is not allowable deduction, right? It means that when you have assets, now the assets, the depreciable assets, like let's say if you have a car, building furniture, computers, and other stuff, you have to depreciate them, right? Now the depreciation you have calculated, sometimes you capture it as an account, is part of accounting expenditure, right? But when you come to taxation, depreciation is not allowed for the purpose of tax. So if before arriving at this profit, depreciation was part of the expenditure, now we are going to add it. Then we have non-allowable deduction. There are certain expenditure that if you incur, you cannot deduct it from your income before arriving at the profit. If you have those things, you add it, right? Then you get total add backs. Now you're going to add the total add back to the net profit or loss. And then you get what is called adjusted profit or loss. Are we together? Are we moving small?
Yes, please.
Good. Then we come to deduction. Non-taxable income. You know, it is not all income that is subject to tax. Not all income are subject to tax. So all those income that are not subject to tax, but you deducted. Now, but now it was added as part of your income. Let's say dividend. You know, dividend is subject to final withholding tax. So if you add dividend income to your other your income, it means that you need to come and deduct it. Right. So that's part of non-taxable income. Or income that has the losses that you are exempted, you are not supposed to pay tax on it, but you are included. You have to deduct. And then the second one you need to deduct is what is called allowable deduction, like capital allowance. You know, we said that depreciation is disallowed when you come to tax. But when we disallow it, the law provides that you need to calculate for capital allowance. For the capital allowance is deductible for the purpose of tax in place of depreciation. Right. Then we have carrying over of losses. Now, the carrying over of losses is that previously you make some loss, and the law permits that any loss you have made, you can carry those losses for the next 5 years, like financial costs or foreign exchange loss, right? You can carry those losses for the next 5 years. So those losses, you deduct all of them. Now, why do you deduct all of them?
Senator, I'm having a meeting.
Please, can you mute those who are speaking so that when we are done, you can ask the question. And when we get all of this, we are now going to add what? Our total investment income, our total employment income to our business income and get what is called accessible income. So if you add business income, employment income, and investment income, we get what is called accessible income. Is it clear? Now, when you get the accessible income, we are going to do some deduction. We are going to less. Income tax at different rates. If you have any income tax that have been taxed in different rates, you come and less it, right? Then we come to deduction like reliefs. As part of our discussion, relief is going to be part. But let me walk you through the relief before we come to this sheet again. You understand that? I want you to understand everything we are doing today, so that you are going home to tell your family or your friends or your workplace that, Charlie, I now understand the relief. It means it tells them, oh, okay. It means that GRA is not only taking our money, they give us some kind of relief. They give us some kind of our tax benefit that you didn't know. Now you know. By the end of this presentation, you know, and you know it. Let me show that slide that talk about reliefs. Is my screen showing?
Yes, sir.
It's not showing you.
It's showing now, sir.
Now, we are going to talk about tax reliefs available. Now, this tax relief is only available to resident Ghanaians. It is available to who? I want someone to tell me.
Resident Ghanaians.
Resident Ghanaians.
Resident Ghanaians.
Resident Ghana.
Because I don't want you to go and say that, hey, it is available to everybody. No, that is not true. The law says that, see, my citizen is at my heart. Give my citizens some reliefs so that they can continue to pay the tax. One of the relief is marriage or responsibility relief. If you are married or you have a responsibility, you are entitled to relief of 1,200 per year. Now, it is not every marriage. There are some marriage that you don't have papers for it. If you are married and you don't have any document to show that I am a married person, don't go there. Because before you can enjoy this relief, you should be able to provide documentary evidence that you are a married person. You have a wife called Asumasi. You got married on this date. This pastor blessed it at this place, right? That is when you can apply for this marriage relief. Or you have responsibilities. This is taking care of. You have some family responsibilities. You should be able to do that. You are indeed responsible for those things. If you are able to prove that you have responsibility or you're a married person, the Commissioner General will give you relief. The whole of the year, 1,200 Ghana cedis. Huh? You can use it to go and chill with your family, isn't it? All right. Now, here, only two. Two couples. We are all two couples. Only one can enjoy it. Right. Both of you cannot enjoy it. You cannot enjoy it and tell your wife that you are. You two, you can go and take it. No, they won't give you. Right. Then we have child education. Now, if you have children that you are taking care of, the condition is that the children you are taking care of should be schooling in Ghana. Should be schooling where? In Ghana. If you have children and they are schooling in US, it means that you have money. Right? If you have children who are schooling outside Ghana, well, you don't have problem. So this small money will not do anything. But if you have children who are schooling in Ghana, the law says that you'll be entitled to a relief of 600 per a child. And the maximum children is 3. If you have 1,000 children, you can only get 3. If you have 10, you can get 3. You have 5, you can get 3. You have 4, you can get 3. If you have 2, you can get all. If you have 3, you can get 3. If you get 1, you can get all. Right. Maybe if you want to enjoy this and your child is 1 or 2, you can add another one or right, for every year. Good. Then we have old age. If you yourself, you are old age, let's say above 60 years, we consider it as an old age. And old age tax relief is 1,500 per year. You should be able to produce your birth certificate that you are under old age, you are beyond 60 years. Right. And then we have aged dependent. You have aged dependent like your mother and your father. You can take a relief for agent dependence, and the maximum you can get is 2. And the amount they'll give you a year is 1,000 Ghana cedi. It means that every year, one is 1,000. So maximum of 2. Professional or vocational training. If you're engaging in professional training or vocational training, you can get what is called a tax relief of 2,000 Ghana cedi per year. Straightforward. If you're able to produce that, you are attended the program, training program, that is vocational or professional, yeah, they say, okay, fine, we'll give it to you. Disability. If you are a disabled person, the law says that you get a relief of 25% of your accessible income. Right. So these are reliefs that are available to resident individuals. This is not for companies. Companies are not part of it. Someone is, so where can I go and apply? Yes. While you are working, you can go to your HR. Your HR. I have some information. They say we can enjoy some relief and that we should come to you. You give us the form. You go to HR. If HR don't have idea, you yourself can go to their office. And they should give you a form. But normally HR will have them. If they don't have it, you can go to their office. Or you can consult your accountant that, oh, if you go to GRO, take some fund and they will do it for you. This one, they doesn't tell anything. Go and claim it because it is for you. Right. Or you can go to GRO portal and get it. You download it. You fill and attach relevant document. You submit it to your either EHR office or GRO office, and they review it, approve it. When they approve it, you send it to your accountant or the payroll department. When they are preparing your payroll, they factor this into it so that at least at the end of the month, something small will come because you will be paying lower kind of taxes. Right, let's continue with our form. I want you to understand everything about it, especially if you're a business owner. You should understand this. Or if you don't do it, as part of annual filing, you have to do it, right? Now, you see that you said deduct reliefs. Social Security is part of the relief. You know, Social Security will pay 18.5%. Out of this 18.5, you, the employee, pay 5.5. This 5.5 is a relief to you. They deducted it from your salary, so they will get you as a relief. Marriage, as we did, you come and deduct your relief, 1,002. Child education, you know the number of children you have. Old age, you come in. You see that everything is factored in the form, right? You see disability, cost of training, pension, voluntary pension contribution. You know, we have PF, that's Provident Fund. Now, if you contribute Provident Fund, the maximum you can contribute is 16.5. That will be tax allowable. But if you contribute more than 16.5, let's say if you contribute 20%, means that only 16.5 of that percentage will be allowed for tax. The excess you have to pay tax on it, right? Then you have the total deduction, right? Then you have, when you take it from the assessable income, you get what is called chargeable income. Now, when you get a chargeable income, individual will pay tax using the graduated rate. What is it? First year, like 5,880 is nil. Next is one, I think next one is 135 or so. I think my memory said me 1320, right? It's full. So use that. Now, if you determine amount of tax you're going to pay, you have to less any amount of tax that have already been paid. Maybe you supply some goods, they have withhold tax, that is tax credit. You have paid taxes like as employment, they have been withholding tax payee. All of those, you take it into consideration, and payment on account, all payment of taxes you have paid, you put it there. You deduct it from the tax you're going to pay. If you deduct it, and the tax you are going to pay is more than what you have already paid, we refer to it as tax payable. But where the tax credit and payment accounts are more than the tax you're supposed to pay, you get what is called overpayment of tax. You can write here for it. Right. Good. Now, when you come, you have to declare declaration. If you are the one who prepared this document, who filled it, you write your name. Maybe David Kupour. I do hereby declare that the information contained in this red text, to the best of my knowledge, is true, correct, and complete. So you are telling the judge that everything is accurate. When they find out that it is not accurate, you'll be very unreliable. So if the accountant or you are responsible for this and you're doing it, make sure the right thing is done. But if you don't do it, the reliability, you'll be reliable for that. Then you put your signature, the date there. If you have contacted somebody to do it, the person have to write the name on behalf of, assume this person that I did the filing, right, returns. Then the person will sign. Then the person will sign. Then sometimes you bring your relationship with every company. Most companies have relationship to tax manager. You have those people. Then you put it there. Maybe it's your tax consultant or your auditors who have done it. You put it there. That is how this is done. Now let's look at company limited liability companies. But before that, let's look at the tax relief forms, so that you will see that, okay, this is how it is. Can you see that screen? I'm showing it now. Can you see it?
Yes.
All right. You see that place, you have the employee's name. Your name will be there, your sign name, and your other name. If you're male or female, you take your date of birth, your Mother's Day name, your social security number, tax filing number, name of your employer address, your telephone number, and tax ID of your employer. Right. Have there been any change in your personal particular from that of the previous one? If yes, you say yes. If no, you put no. Right. Right. If it is yes, you have to come in. So you come to the personal particulars. Are you married? You tick. You're single. You tick. Your date of birth and all those. So if you're married, the name of your wife or your husband, the particulars of them, their date of birth, their TIN number, the social security. Right. Now you come to children. Do you have children? You put it there. So here, if you say you're married, this is married relief amount. You put it there. Right. This is old age, above 60. You put it there. Now you come to your children. You see, they are provided at least 3 boxes, or the maximum you can get is 3. You mentioned, you state the names of your children, their date of birth, where the education institution, so that they can track all of this. Or if you go to US, this man. Right. Now, if you are disabled, if someone you take disabled, right, the amount is there. The employer have to declare declaration of employer. I do here declare that the above information is the best of knowledge, true and complete. The employer will sign the date and declare, right? Right. Then the employee, your own is also here. Do you have any source of income than your employment? If you have more than one revenue stream, you put it and you sign, you put it, and then you calculate all of it. So when and then the year of assessment, you have to put it there. You put a photocopy of the employee, your photo, your passport picture will be attached. Then you send it to DRA. I think when you submit it, within 2 weeks, they should be able to do it. But even within 2 weeks, and if you don't get it, you can go and do follow-up, right? So this is how the tax relief is being done, right? So this one is for free. You can go and do it, right? I want us to go through last one, then we'll call it a very beautiful day and a night. Is it showing?
Not yet.
Okay. Okay, so this is the company owned. So your currency, if you are dealing in cedis, you take cedis, dollars, whatever cedi you are dealing. Your taxpayer, like this one is similar to what we have just done. You take your taxpayer office and the name of the taxpayer's office, if it's a Legon, wherever. Then the year of assessment, 2025, the period 1st January to 31st December. The name of your company TIN number, right? Then you have the personal address of the company, location address, telephone, email, and the website of your company. Now, if it is rented place you are using, the same way you take and the information will come, you provide the owner of the place. And if it is owned by you, you take by that friend. Good. The date of incorporation, the date you incorporated. Now, if your company is a listed company, you take yes. If it is not listed, you no. Then you take the business location. Is it in Accra or Tema? If it is Accra or Tema, you take. If it is regional capital, you take. If it is others, you take. Right. Then they ask you, do you enjoy any tax holiday? If you are enjoying any tax holidays, you take. After you take, you come and list the tax holidays you are enjoying. The date is start from and the date of first production, right? Now, they will ask you, do you have a tax consultant? If yes, you provide. If no, you need to get a certified tax consultant, right? Approved tax consultant who do that. You take. You provide the name of the tax consultant, provide the TIN number, their email, website, even and telephone number. You put it there. Now, as a company, if your financial statement, if you have your financial statement, you have the balance sheet, maybe in balance sheet 30, statement of financial position or position as at 31st December 2025, you put the 2025 there. Now, if you go to the balance sheet, it means that you have to go to the balance sheet as look at the cash assets held in currency of returns. You state it and put it there. Assets held in different currencies. Maybe you have Ghana cedi and dollar. You put all of them. Now you come to trade payable in currency. So if the financial statement is provided, all of this thing is there. You just go and pick it. Right. When you add, you're supposed to get total cash assets. And if you put the trade payables, that one will be there. Then you come to the inventory side. These are all under current assets and liabilities. Right. So you have the inventory figure of the stock, put it there. Account receivable, total current assets. You add all of them, you get what is called fixed assets. Then you come to the other side, other payables in your own currency or different currency. Shareholders fund, you put it there. Then you add all, you get what is called total assets and total payable and fund. It should be the same, right? It should balance. It means that the total assets and the total payable and fund should be balanced. If it doesn't balance, then we come to the income statement form. The income statement side, you can take your profit and loss statement. You have your business income. If you sell locally, the income you get locally. If you export, the income you get when you export them. If you have any investment income, if you have any other income, you put it there. You write this, right? Then you come to expenses. Operating expenses, your cost of sales and direct costs. In the currency of return, if it is Ghana cedis, the amount in the cost, or let's say operating expenses and cost of sales, you write it there, right? If you have it in different currency, then you get what's called total operating expenses. Then you come general and administrative expenses. You have director remuneration. If it is there, you put it there. Staff and labor costs, you put it there. Then you have interest expenses. If you have any interest expense like paying interest on loan and other stuff, in the local currency, you put it. And if you have any in the foreign currency, you may convert it into your currency of returns, right? Then you have the total interest expenses. And when you add it to this, you operating expense, you get what's called total general and administrative expenses. Now if you have depreciation, you put it there. If you have any foreign exchange losses, you put it there. Other general and administrative expenses, you put it there. Now, when you finish, you add all of them, 18, 19, 20, 22, and you get what is called total expenses. Now, when you take the total expenses from the business income, you get what is called net company profits. Right. Now, when you get the net company profit, we are now coming to tax. As we did in the personal income tax, you pick the profit you have made. You do certain add back like depreciation. Depreciation, we are saying that it's not allowable. You need to add it back. When you add it back, you get what it's called. It is not only depreciation. There are certain expenditures that are not allowable. You put, then you add it back to that company profit or loss. Then you get adjusted net profit. Then you come and less non-taxable income that are not taxable. Right.
Please, the network is breaking, sir.
Oh, again?
Yes.
Is it fine now?
Kindly continue. Let's see.
Okay. So when you do that, you get adjusted income. So you now come and allowable deduction, capital allowance, carrying over losses, other allowance deduction. If the company provide your auditor finance, if you open all of this information, the accountant or the accounting firm will do that in respect of that, right? Then you have the chargeable income. The tax rate, if it is normal company, is 25%, right? Normal company is 25. If you have any other tax rate differently, you put that one too, right? Then if you do that, you get what is called a tax liability. Now, under the tax liability, you may be enjoying some tax rebates. You may be enjoying tax rebates. So tax payable, if you have the tax payable, then we come to when you have the total amount of tax you're going to pay, then you are going to less all the taxes you have already paid, like withholding tax credit. If you are supplying goods and they have withhold tax and they have paid, that will be on your quarter. You have the total amount of that you put it there. Tax paid directly, when you pay, you are the beginning of the year, you estimate and you paid on quarterly basis. All the amount you have paid, you have to come and put. And prior year credit, let's say if you have any tax credit available in previous years, you can bring it and then you deduct it from the amount of tax you are going to pay, right? And then if the tax credit is less than the total amount, you get tax payable. But if it's more than the tax you're supposed to pay, you get tax credit or overpayment. Now, when you finish, you need to provide details of director's remuneration or loan. In the name of the directors, their status, are they resident or non-resident, their TIN number, their director's fee, salary, if there's no interest, and we put all of them together. When you finish, you have to declare that David Kupour, I did this, and I hereby declare that the information in this return is complete. You sign your position in the company. If you're accountant, you sign. Then because it's online, previously we do it, you just fill it and send it. But now it is online, you can do all of this in online. So that is what it is. That is what we needed to discuss for today. Annual tax filing and tax relief. Here I come. Thank you very much for joining. Any questions?
Yes, Mr. Kupour.
Thank you very much, Mr. Kupour. And so that was very comprehensive. And at this point, we'll proceed to a few question and answer segments. We are far behind time. So let's do this in an orderly manner. Kindly raise your hand. You can also drop yours in the chat box and then we will take it. So we encourage the questions should relate directly to today's discussion. I mean, what has happened over here, and then Mr. Kupour will pick a few of them. So I think I saw Kingsley. So Kingsley at Chugwe, your hand is up. Kindly on mute and ask a question. Thank you.
All right, Thomas, thank you so much. I'm very grateful for the training.
Okay, Kingsley, please keep it.
Okay, so my question is, without one filing the annual tax return or filing the annual tax whatsoever, does it mean the person cannot get the reliefs that we saw as listed in the GRA's operations? Then what is a director's allowance or director's fee, as we saw earlier in the presentation? Thank you.
I didn't get your question.
Okay, so sir, if you are with me, I'm saying that if you don't file your annual tax returns as an employee, does it mean that you cannot qualify for the reliefs in the GRA's operation, the tax reliefs?
Well, you need to apply for it first. If you don't apply for it, you can't enjoy it.
Without filing your annual tax, annual tax, you can apply for it.
Oh, you can apply for it, right? Every year you can apply for it. It is not, if you apply for it, they grant it. It's expired 31st December of that year. So the following year you need to even apply for it again. So how you do that, you have to make sure that you also file your annual returns as well.
So, for example, I recalled I checked recently, I've not filed for my annual returns 2024, 2025. How does it go against me? Hello?
Yes. So it is mandatory. You have to file, right? You know, for you, if you are into only employment and you file, I think you will not pay anything again. You don't need to pay any taxes unless you are into some other business where you are getting money. You need to add it, and then you pay the difference, right? It shouldn't take you a long time, so you can consult us. We can do it for you within 30 or 1 hour. If you give us the relevant information, we can do for you.
Okay. Thank you. Then the director's fee or allowance, is it different?
Fee or allowance, that is is part of the company policy. The companies, they decide how much they will be paying to the directors, right, or allowance. So, and you know that when you are paying directors allowance, is subject to withholding. We'll talk about more in our training on 28th, right?
Okay.
Good.
Yeah, Kingsley, I think that's okay. Cynthia Blagoji, please unmute and ask a question.
Yes. My question is, it's a sole proprietorship which started operating just somewhere August, and production started this month, January. Do you have to file these tax returns? Because
you started when?
Operating last year, August, but production itself, I'm into poultry farming. Production itself started just this January.
Okay.
So what happens to me about this tax returns, filing of tax returns?
You can file, but you're filing just maybe statement of affairs, right?
Oh, okay.
You have not started operation. Just statement of affairs means that you will not be paying even any taxes. Provided,
so in this case,
but sometimes they do assessment for that year. If they have done, you are registered with GRA already. They might have done. You have done that, right?
What I did was I registered with GRA because I had to pay for my employees' taxes.
In that case, you need to. They might have raised assessment for you in that year, so they will have required you to provide the assessment. You have to pay it on quarterly basis. If you have paid it all, then I think you just do the statement of affairs and file.
Oh, okay.
Yes.
All right. Thank you.
You're welcome.
Okay. Amakumsin, please let's go ahead.
Okay. Good evening. So my first question is, what I've worked for about 10 years. My employer never told me that I should do my personal income tax until I left the job to start my job, and then I was asked to provide annual tax returns, personal annual tax return. That's when I had to pay, and I had to pay huge penalty. So is it that the employers, they don't have to tell us or something? Because I don't know why they didn't tell me, and I had to pay for dearly for that. And also the forms that you discussed with us, like this is my first time seeing the form. When I had to do my annual returns, it was rather I think it was one pager with some lines, black lines. We have forgotten the name that they have for it. It's just one pager document. That's what I was used to fill. How different is that report? They call it form, I think form 11 or form 21. I'm not too sure of it. But how different is it from what you discussed with us, the long one that you discussed with us? Then the final question is, hello?
Give it to you.
Then when I was filing my personal tax, hold on, I think I have the documents. I want to look at what it's called. My HR gave it to me as at that time. It's it has employee tax deduction form annual.
Okay.
Yeah,
I
form
think
IT form 51 supplement.
okay.
I was asking how different is it from the personal income tax returns? And then
I
the
think
final one is, pardon?
go ahead.
The final one is I started a business last year. And truth be told, if maybe I had seen Brics Consult, I would have consulted you by then. I didn't know I had to register with GRA. I thought it would automatically, immediately I register with Registrar General, it automatically will mean that I have registered with GRA. Then the kind of business I do, they take withholding from me. So at the end of the year, I wanted to know how much of withholding I had with GRA. That was when I went to GRA and I was asked to fill the forms all over again. Then I was given the personal, it's a limited liability. So I was given the personal income tax return and also giving the company forms to fill. And my question is that there are three directors to the company, but one do not hold any shares in the company. The person is just an independent director. Like he doesn't have any shares. But GRA says the person who do not have shares in the company should also fill their personal tax. So I didn't understand why the person who do not have any financial interest in the company, but because of documentation, she had to be there to also file her personal tax. I just feel it's like, pardon?
But you said the person is a director.
Director, but he doesn't have shares.
That is not what since the person is a director, the company require that every directors must provide their tax details. It's the same as with GRA. All directors that have this part, they have to provide their details. Whether you have financial interest or not, you still have to.
So that's with the company that they work, because the director already has his or her own company that they work with. So now the personal tax returns has to be from the company the person is working with, right?
I think this one you're talking about your company directors.
Yes.
So you have to do that, provide details for them, right? If you are paying allowance to directors, you have to provide, and that they say that okay, directors allowance paid, you have withhold taxes and right. If there's any loan to directors, maybe if he have enjoyed some, those things will be taken up, right? It's for a purpose.
Okay. All right. So it's basically for the company, not for where the person is working. Maybe the person is a lawyer. It's not the law firm that the details of the law firm that the person will provide. But for my company, okay.
You have appointed the person as a director of your company.
Yes.
You do not appoint the person as a lawyer to your company.
Okay.
If the person is a lawyer to your company, they won't require that you should provide a person details as a director. No, they won't do that.
Okay, so meaning it's not everything that is applicable, because there are some that I don't pay the directors and excess bonus, cash allowance, and those things. So that means they are not.
The thing is that once you said they are directors of your company, when you are filing, the details are there. You need to file all details of directors. There's a purpose, right? Now, sometimes because they are related, there might be transaction that the person also have a company that you transact with. And they have to look at all of those things. They need to know who are the directors of the company. Whether you pay them allowance or not, you need to provide for that.
Okay. So if I don't pay them, then I don't provide.
No. Whether you pay or you don't pay, you need to provide. This is mandatory.
All right. I've registered for your class, so I'm sure I'll ask more of my questions there, because this is news, a lot of news to me. But I've really learned a lot from today's lesson. When I went to GRA, the person who attended to me didn't give me in-depth understanding of these things. So I'm pretty sure I'll get more from the class, and perhaps if all things go well, I'll consult you to also help me.
For us, we are there to help you out.
All right. Okay, so my first question, no, answer it. Why is it that the
you've already registered for the class, right? So you can reach out to Mr. Kupour outside this.
Yes. After here, you can call me. Then we talk.
No problem.
I'll call you. Another engagement with other people. So if
No problem, no problem.
Thomas, if you can manage so that I can finish by 6:30 because they are also waiting for me.
Okay, that's fine. Two more hands, Samsung and then Ellis. Please make your question very simple so Mr. Kupour can respond, right?
Okay, good evening. Please, I want to know, in the case of a lawyer who has a sole proprietor, when GRA wants to audit her, would they audit her as a lawyer and as a sole proprietor?
Who is that? Is that if you're a lawyer and you have a law firm?
No, you don't have a law firm, but you're a sole proprietor of a different entity. But you're a lawyer by profession. Doing GRA's audit on you, will you be audited as part of your lawyer practitioner?
Okay. I think they'll audit your sole proprietorship business separately from your law, right? Maybe you might be working for a law firm, right? So when the year end, you have to file your annual return. But when you come to sole proprietorship, as we went through, you see that there's a business income from employment and investment, right? Now, your sole proprietorship business, the income will be there. And employment, if they have been paying withholding tax, you have to file all of those things detail also there. Then you have the business and your employment all together, you treat it one, right? But when they come to the audit, they'll come to your company to see that if you're paying the right amount of taxes, right? But when they go to the employer into employment, they will have to go there and assess whether the amount you disclose is accurate or they have been paying the relevant taxes in respect of that, right?
So in that case, they will audit you as a lawyer because you are employed. What if you are not employed in a law firm?
If you are not employed in a law firm and you are earning chargeable income, maybe they will look at whether the income you get, you pay taxes on it, especially when a company hire you as a lawyer and they're paying you, they tell you that they will withhold tax from your payment, right? Now, when they withhold tax from the amount they're going to pay as a legal fee, they will file with their details. That is where they can also track who you are and find out whether you have been paying taxes, right? And they'll track you, right? Fine?
Yes, sir. So I also want to ask the returns, where do you have where we have rented and owned in the case of the business? When you click on rented, you expose your landlord. But when you click on owned and you don't have a building as a fixed asset, would that be a questionable thing by GRA?
Well, you can't tell the taxman we are all human beings. So when someone say I own it, and in a financial statement you don't have interest, how did you own it? Did you steal it, or they gifted you? Even if they gifted you, you have to keep it as part of your records, right? So you can't tell Jerry that where you're operating is for you, unless it is a very small place. It is, let's say, it's a very you don't need a building, but if you say it's a building and it's for you, they should see it there, right? You yourself, you put it there.
But you should also withhold on that building assets, right? It's a fixed asset withholdable. Do you withhold on fixed assets?
If you're renting, you have to withhold that.
No, if you own the fixed asset, do you withhold on it?
No, if you own it, it's for you. Who are you going to pay any money to? You are not paying money to anybody.
Like you don't deduct 3% on withholding tax for motor vehicle to pay to GRA.
Motor vehicle?
Yes, sir. A fixed asset.
Are you renting the motor vehicle?
No, you have it as a fixed asset schedule. A fixed asset schedule, and you are supposed to withhold from the person you bought it from and pay to GRA. Is that the case?
If you are buying from the person there, you have to withhold, right? Maybe you are going to buy from a company and you are buying that car, you can withhold. Yes, that one is applicable.
Thank you, sir.
Okay, Ellis, last one, then we call it a day.
Yeah, sure. So thank you. 3 minutes. So I wanted to ask, you're a sole proprietor and you have some mini shop, you are doing some small sales. Is there a way GRA does assessment and charge like flat rate? Like flat rate for a year, they came to assess, oh, you are selling these accessories, they do a flat rate, the following year, they do a flat rate. Do they do something like that? Hello?
Sorry, I didn't get your question, please.
Okay. So I was saying that you're a sole proprietor and you have a mini shop where you sell maybe some accessories. Is there a way GRA comes in to do an assessment where they charge you for a year for that assessment they've done based on that mini shop that you have? Is there a way they do that?
Yeah, they
Like a
can do it.
flat rate? Okay,
Unless you have
okay.
no register. If you are registered with them, they will give you assessment.
Okay, so you register with them. For example, you register with them, they did an assessment, and they tell you because of this how your shop is, you are paying this flat rate.
One thing,
Is
when
it
they do
that?
the assessment, they will give it to you that this is the amount you are supposed to pay. So
Okay, so it's done. Okay.
Thomas, I think I have to leave you. Guys, if you have any question, I'm in a group. You can take my number from Thomas. Any question, I'll address it. But we'll meet the training itself. I have more time for you to when you register. So Thomas, I have to leave you here, right?
Okay,
Sure.
Okay, all right.
So Thomas, remove me and take me off. Then you can tell.
Yes, so Thomas, if you can share Mr. Kupour's number with that, then some of us we can contact him.
Sure, I'll do that. So thank you guys for joining.
Please, can we get the recorded version?
Yes, it will be shared as well. We'll be shared on our YouTube channel as well. So we'll post everything hopefully at the end of the day. So thank you guys for joining. Like we said earlier, this is just a small fraction of what we'll be covering in our upcoming 2 days masterclasses, 28th and then 1st. So if you've not made payment, you can briefly do that. You can reach out to us on our WhatsApp number. They are also ready to assist you. So we'll share the recordings. So you can go to YouTube. I mean, our previous webinars are also there. You can watch them. We'll upload them over there, and then you can rewatch anytime you want. So thank you guys.
Thank you.
Yeah, so I'll share his contact as well in the group if you have any question. Those in the paid group, you can request. He's over there in the unpaid group one too. I think he's there. If you have any question relating to what.
Okay, so we'll appreciate the YouTube listening to.
That is fine. We'll share everything as well. And so on behalf of Brics, we thank you once again for joining us. And we look forward to seeing all 60 plus people on 28th February and then 1st of March. Have a productive evening and remember to stay compliant. Thank you.
Hello.
Yeah, hello.
Can you hear me?
Yes, we can hear you.
My name is Rajesh Mosha. I'm from India. Okay. So I worked with income tax also in India. I want to show that you have learned so many things from here. But I want to say something that how many types of income is there, and how many types of form can fill up in this in Ghana, Accra, Ghana. The guys come for corporate income tax. You have a like I said to you in India, there are five income uh, types of income, like income from salary, income business person, income from capital gain, income from other sources, and income from house property. So is something like that also in Accra, Ghana? And how many types of forms you fill up, and you can fill up in online?
Well, yes, there is, but I would have appreciated if Mr. Kupour was here to answer you directly, as I have little knowledge on taxes and then their types in Ghana. So if you don't mind, if you are in our WhatsApp group, I would kindly request you reach out to the official one. I would share his contact with you so you have
I have seen that for your form. It's a combined form, like you can fill up for your income from salary, income from business and profession, and income from capital gain, income from other sources, and income from house property. If single form is there,
So I'm please come again. The final question.
I'm saying
Mhm.
is a combined. There is any combined form like uh, I'm saying that there is in India. I'm saying it is a 7 and 8 form is there. A particular income for what you are gaining, like income from other sources. You have to another form, income from salary, you have another form, income from business and profession is another form, income from house property is another form. So I'm saying that is it also the same in Uttarakhand, like have a different form for different income?
Rajesh, your answer was with Mr. Kupour, who just left the meeting, the facilitator. So if you understand what I'm saying, you can reach out to us personally via WhatsApp.
You saw me that the form I saw you in your Zoom meeting is a business income form. Okay, you show me, but that is not show me you income from salary, income from house property, income from capital gain, income from other sources.
Yes. Yes, there is something like that in Ghana, different forms. So I'm saying, please reach out. The webinar is over. Reach out to us on WhatsApp. And then if you have any other explanation, he will take over.
Because actually, I told you, I have my senior was a chartered accountant in India. He was a 30 years of experience. I worked with him and I fill up all the forms in India for income tax purpose only, I'm saying. So I have learned so many things because here also so many detailed form in India because one form is related to another. Suppose you are income from salary, but you have other income also. So you have to mention from particular your base. What is your base? Base is that you are getting salary from a company, but another income is that you getting capital gain. You have some capital gain. You have some properties. You have some other sources income. So you have to accumulate this. It's called clubbing of income. You know what is the clubbing of income? When in clubbing of this income, you fill up in your income from salary and you give detail all of your income right from this. I'm saying fill up all detail in your particular form.
Hi, good evening, sir. I'm trying to pronounce your name, but um, so my name is Emmanuel Ajay. I'm a member of the team. I think we got your question quite clear. Yes, all that you've mentioned, all the various forms of incomes that you're aware of in India does apply here. Um, it's just terms that accounting people would use to describe the kinds of income people do receive. So yes, from capital gain, from properties, from inheritance, from all of that does apply in this country as well. All we're saying is that in terms of the details of how these things work, um, because this is just an opportunity for us to have a feel of the actual training, we would have said that now that we have closed, because this is closing time, now that we have closed, please feel free.
No, I will
In fact, we'll
discuss with you
personally send
when I
you
will bring
the
and
the
discuss with
gentleman's
you all
number.
the details because I have a 17 years of experience in accounting and taxation. Please listen to me. In India, I have a more. Presently, I'm working in Ikra Ghana in a FMCG company. Okay. So there is also so many things I feeling all the details like pay taxes, ad, estimate, all the done we have done. We have an auditor also, and we do the recently we do auditing, but I think in June, April, May or June we start the auditing and we file the income tax return in. I think is a what is the due date of the filing of this income tax returns?
the date for filing of income, the tax returns. I'm sure the accounting people can help us here. In Ghana, when are we supposed to do our tax
Before that, you
filing?
do audit, na? Before that, if doing any filing of income taxes, then you will do audit.
So, Chief, let me say this again. We will call you personally because we have other people being held on the line right now, and it's closing time. We'll call you personally, and then we will get an accountant to explain all of this for you. This is not a problem at all. This is why we're here. So
Second
please
thing is
be patient with
just
us.
last question. Okay, understand. Last question is that suppose I want to do something like that. I know in 2 days you cannot learn so many things, particular about the income tax in 2 days. So if I'm doing like 3 to 4 months to 6 months, so how can I do that? Because I know
Please let me.
in 2 days you cannot learn anything. I know that you are saying that you will 28th of February and 1st March you will do 2 days tax trading. So I'm saying that in 2 days you cannot learn so many things about income tax. Maybe you will get basic information, but you will not go to detail. But I want to go to detail because you have a business income, but you have a director, you giving director to salary. Director have also income. Director have some other sources, some income. Director has a property. So there is so many things you related each other. You understand that?
So yes,
Yeah, all of
I
these things I've
understand.
already learned.
You see, what we're saying is this is not supposed to be a platform where we give all the
Right,
details,
absolutely,
because we have a platform where all the details will be given, and that's a paid platform. This is a free webinar. So all these concerns, I can assure you, will completely or thoroughly be addressed on the set day. In fact, we don't have to even wait for the day. We're excited to help you out. Apart from the fact that we do trainings, we're consultants as well in these fields. I am just a team lead, and we have all the expertise available to be able to help you with this. So all I would say is be patient with us. I'll get Thomas or Andy to pick up your number. We'll call you after the program, and we'll make sure that we help you out. Even if it means paying a visit to your company, these are things we do. We travel even outside Accra to help people um, um, get solutions to their accounting challenges. We understand that this is a completely different environment for what you are used to. So we don't think it should be a problem at all. We will be willing to help you. So if you would permit us, we'll close the program for now, but we will reach out to you so that we can take it from there. Thank you very much, sir.
Yeah, did you know that already that has been changed in Ekragana from the 1st of January 2026? Because we previously we have used
So
levy before
I
that.
think, Andy, you can take over now.
Okay, thank you, sir. And then I would like to officially end the meeting at this point. So thank you guys. And then the rest of the information we dropped in the WhatsApp group. If you have any question, you can WhatsApp any of the admins in the various WhatsApp group as well. So thank you and enjoy the rest of your evening.
Thank you so much.
Thank you so much.